Hello people, you're welcome once again to our YouTube channel. If you are a returning subscriber, I want to thank you so much for your support. And if you're a new subscriber, you're welcome to this channel. And I want to assure you that you will become a very good and a profitable forex trader if you continue to follow this YouTube channel. If you're here to subscribe, kindly do so. Kindly subscribe to our channel and also turn on the notification bell so that you can be alerted when I post new videos. Every week, I bring you videos and contents that will help you to become a profitable and a better and a professional trader. Also, we have a Telegram channel where I actually post chart analysis almost every day. As I get good setups, I post every trade that I take. I ensure that I share it in the Telegram community for free. I share all my trades for free. All trades that I take, I ensure I share them. I give you the outlook as to how I'm looking at the market and where I'm looking to take trades from which zones I'm looking to take trades from. So it will do you good if you join that Telegram channel. The link to that Telegram channel is in the description box of this YouTube is in the description box of this channel, or rather this video I've actually made is in the description box of this video, and also at the profile section of this YouTube channel. All right, so today I want to show you something very important. Before we go into the video of today, some of you want me to mentor you personally. If you want me to mentor you personally, I will be very glad to do so, to help you to become a profitable trader, one-on-one mentorship. I have several persons I'm mentoring, and if you want to join them, you can actually contact me. My contact detail is in my Telegram channel, and the link to my Telegram channel is in the description box of this YouTube video. All right, so today I want to talk about something very, very important. Each content I bring you will improve your trading by one or more, by a lot of percentage. Okay, each content improves, takes you from one level of professionality to another level. All right, so that is why you need to be able to pay good attention. Please pay attention to this particular video, because it will take you higher. It will step up your professionality in this business of forex trading. So today I want to talk about how to combine the change of character. Okay, how to combine the change of character and Fibonacci, the Fibonacci retracement, okay, in order to increase your win rate. In order to increase your win rate. Okay, so when you have further entry confirmations, which we actually call confluence, when you have confluence, more confluence will yield higher win rate. Okay, what do we mean by confluence? Confluence means when you have more things you are looking at, more things you're going to look at, more sieve for your trades. It will help you to increase your win rate. More things, more features that you are going to look at before you take a trade. When you have more features, okay, more confirmations. When you have more confirmations, or what we call confluence or confirmation, the same thing. When we have more confluence or more confirmation to a trade, it will give you higher win rate. So that is why I want to add a step. I want to take you a step higher when it comes to entry confirmations to trades, when try trading demand and supply zone. Now, you know, demand, you have demand and supply zones. Okay, you have demand and supply zones. Why trading demand and supply zones? There are two ways to enter a trade. While trading demand and supply zones, there are two popular ways you're going to take that is being known worldwide of entering trades while taking demand and supply zones. All right, so the two ways are these. Two ways or two entry model for demand and supply zone. The first one is, you already know, limit entry method, and the second one is confirmation entry method. Okay, the second one is confirmation entry method. All right, so now what if I tell you that the confirmation entry method, as you know it, can be further classified into, you have confirmation entry, the first one, it can be further classified into the change of character method of entry, and now I'm adding another one. This change of character entry is the popular one when you talk about entry confirmations for demand and supply, or demand on supply, or smart money concepts. You can have the change of character entry method, and now I'm adding the change of character plus Fibonacci retracement in order to increase your win rate. So we're going to be seeing all this. All right, the limit entry method, let me show you. The limit entry method is a situation whereby, for the limit entry method, I'm taking these things from the scratch in order for you to form a foundation for you. Not everybody have a good foundation when it comes to trading, so that's why I'm trying to take it from the elementary stage in order to from elementary to advanced stage. All right, I don't want to assume that you know. Even if you know these elementary aspects, it's for those who do not actually have this foundation. That is why I'm taking it step by step. All right, I'm a teacher, and I'm taking it step by step. Now for the limit entry method, this is a situation whereby you have a demand zone. You have a demand zone like this. You have a demand zone like this. This is a rally base drop demand zone. So you have a demand zone like this, and what does the trader do? The trader would just place a sell limit order right here at the entry into the demand zone. You place a sell limit order right here. So once price comes into the zone, it will trigger your sell limit order, and stop loss will be placed just a few pips outside the zone. And then when your limit order will be triggered, and then it's expected that the market will sell and give you profit. All right, and the profit will range from 1:2 to 1:3 or more risk to reward ratio. All right, so this is the limit order entry method for a sell scenario. Okay, let's look at the limit order entry method for a buy scenario. For a buy scenario, you have the market formed a demand zone. Okay, a demand zone, and at this demand zone, we expect that the trader comes to the entry of the demand zone and places a limit order, which is called a buy limit order. And this limit order will also be called set and forget. All right, you just place the limit order, you walk away, you close your chart, you go about your day's limit, your day's business. Okay, you place your stop loss right here at the other side of the zone. Your limit entry will be at the entry into the zone, while your take profit will be just at the length here, at the beginning of the zone, or rather not the beginning of the zone, the length of the initial distance whereby the zone was actually formed, from where the zone was formed. So this is your take profit. So what is expected is that the market will come to the zone and your buy limit order will be triggered, and now you have the market sell to your buy to your take profit. All right, but the disadvantage of this limit entry order is that sometimes the market would come, trigger your limit order, go into the zone and buy and respect your trade direction and buy. But sometimes, or several times, the market can as well continue to sell and hit your stop loss instead of buying, and so you lose the trade. Right, so that is the disadvantage of the buy limit order, or rather the set and forget or the limit entry method order of trading demand and supply zones or smart money concepts. All right, so that is the disadvantage. So that is why several traders now step up and we now started trading what is called this number 2 method of entering demand and supply zone, which the first one we said was limit entry method, or which is also called the set and forget method. All right, it's also called the set and forget method. All right, so now the number 2 is now the confirmation entry method. All right, and this confirmation entry method is actually the process of having what is called the change of character, spotting a change of character. All right, and now you enter on a return to order block, which is called the RTO. All right, so this is actually the confirmation entry that is known, but today I'm adding a step further by giving you another additional type, whereby you have your change of character, you have your return to order block, plus your Fibonacci retracement confirmation. All right, so let us go straight into it, to the confirmation entry method. Let us see how this works. The confirmation entry method, how it works. Okay, how does it work? How it works is that you have, like, let's say you have the market pushing up to the upside, creating higher highs and higher lows, pushing up to the upside, creating higher highs and higher lows, and now you want to trade this demand zone. You want to trade the mitigation of this demand zone. And so what you're going to do is that a limit entry order trader would just place a buy limit here and put a stop loss right here. All right, but the market can as well come and break through and continue to sell instead of buying up. All right, so that is the disadvantage. So that is why we want to implement what is called the confirmation entry method. All right, for the confirmation entry method, what are you going to do? You wait for the market to come to the zone. All right, and the market comes into the zone. You do not get into the trade. You are waiting for something. You're waiting for something to happen, which is called the change of character, whereby this supply zone is taken out by the market, and which gives us what is called the change of character. All right, when the change of character occurs, you do not still get into the trade. You wait for price to do what? To actually come back to the zone that caused the change of character, which we refer to as the return to order block. So once the market comes back to the zone that triggered the change of character, you get into the trade, and you expect that the market is going to buy. All right, but there have been cases whereby even after except you are doing something. Last video I made, I told you how you can trade the 5 pips profit method, whereby after the change of character, you wait for the return to order block and you get into the trade expecting to get out at 5 pips. That is a 100% win rate method. All right, because the market must move 5 pips after a change of character and the return to order block. All right, that is if you've seen my last video, which I made regarding the 100% win rate method, or the no loss strategy. That is just the no loss strategy. But if you are looking to gain more, profit, you are looking to gain more profit, not just doing the scalping method as I described, you would want to have the market do what is called a return to order block, and you get into the trade and buy up. But sometimes we've seen cases whereby even after the return to order block, the market will do 5 pips up, as it must do, according to me. All right, as it must do, the market must do 5 pips, at least 5 pips to your internal market direction, according to me. All right, according to Emeka, according to me, according to my theory. So after the market have done the 5 pips and moves up, sometimes instead of the market to buy, continue to buy, it might reverse and hit your stop loss. Although those that have done 5 pips would have gotten out of the market, but the market can as well reverse after that 5 pips and hit your stop loss. All right, so that is why I'm going to be adding that extra confirmation to entry. All right, so the extra confirmation to entry in this case, which is instead of doing the change of character plus return to order block, now we want to do what is called the change of character plus return to order block plus Fibonacci retracement. All right, Fibonacci retracement. All right, Fibonacci retracement. So that is what I want us to do right now, and I'm going to show you how this works. All right, let me show you how it works. Let me show you how this is gonna work. Okay, so how does this work? How it works is that now instead of you to have something like this, instead of you to have the market do like this, okay, let's have a cleaner chart. You instead of you to have, let's assume you are taking this for a buy, you want to trade this mitigation. Now you wait for the market to come down to the zone, to the buy zone, or rather the demand zone, and you allow the market to have a change of character. So after the market have changed character, you mark this point, this swing, you mark the two swings of the twist swings. Once you start seeing the retracement, to cause your return to order block, you mark the two swings. All right, giving you your Fibonacci swings. Now you can actually call it the OTE. This is optimal trade entry. Okay, optimal trade entry can also be the Fibonacci, just like it's the Fibonacci. All right, Fibonacci retracement method. So now you start having your retracement after your change of character right here. You start having your retracement. All right, so you just mark this swing high and swing low. So if Fibonacci, if your Fibonacci here will be 100 and here will be 0, I'm going to show you right now the chart. I just want to depict it I just want to depict it pictorially before we go into the chart. So you start having the Fibonacci. If you've not watched my Fibonacci video, I've done a video on Fibonacci video. I'm going to on Fibonacci, how to trade Fibonacci. All right, on how to trade demand and supplies on using a Fibonacci, and I actually will be linking it on the description box of this video. So you take our time to view that. All right, that will form a foundation to what I'm doing right now. Okay, that video, you should watch that video on Fibonacci I made. I'm going to link it on this description box of this video. Then that will help you to trade this better as well. So once you have your Fibonacci, you mark the swing high and swing low of the candles that actually broke structure to the upside, are giving you a change of character. Now once you have your Fibonacci could actually take on position. As you are aware, the Fibonacci can have 61.8, 50%, okay, even 38.2 or thereabout. All right, so now you form it into a flag, and now you wait for the flag to be broken. Ordinarily, you would have put your stop loss right here, but once the flag is broken, your stop loss will be on the other side of the Fibonacci, and now this is your buy trade. All right, this is a step higher. This is a step higher. This could be 61.8 or 50% or any other Fibonacci. I'm going to show you on right now when I open my Fibonacci. So this is a step higher, or a step this gives you a more higher win rate than just trading the change of character method. All right, this gives you a higher win rate than just trading the change of character method. So this is the buy scenario. Let us see the sell scenario of this strategy. This is a buy. This is a buy or a demand or a demand zone. So let us see the sell scenario or a supply zone. All right, for a supply zone, you would have a normal supply zone. You see how you have like the market creating higher highs and higher lows. Sorry, lower highs and lower highs, lower highs and lower lows. All right, breaking structure to the downside, and perhaps we want to trade this mitigation of this zone, this supply zone. This is a supply zone. All right, so now ordinarily we would have actually, if you want to trade the confirmation entry method, or rather the limit order entry method, we'll place a limit order, a sell limit order right here, putting your stop loss right here. All right, and expecting that price will come to this sell limit and sell. All right, but sometimes the market would not respect your sell limit order and continue to buy, hitting your stop loss. That is why it's good to have the entry confirmation method. All right, so that is why I'm going to show you this entry confirmation method right now. All right, so for the sell entry confirmation method, the conventional one will mean you have market comes to the zone, break structure, giving you a change of character. All right, giving you a change of character, and now you wait for a return to order block. You wait for a return to order block, and you now sell the market. All right, so this is the conventional sell model for a sell entry confirmation model. All right, it's a conventional sell entry confirmation model. All right, so let us take it a step higher by implementing our Fibonacci or optimal trade entry. All right, let's take it a step higher by implementing our change of character plus return to order block plus the OTE. OTE is another name for, you can call it, is another name for the Fibonacci. Okay, Fibonacci retracement. OTE means optimal trade entry now, or Fibonacci retracement method. So what do you do now? What do we do? Let us see how this works. So how this works is that you have the market going into the zone, and now the market comes into the zone, break structure to downside, giving us our change of character. When you have your change of character, all right, so the market broke structure, giving us our change of character. You mark this swing up here, and you're now waiting for the market to start retracing. When the market starts retracing, you know that you've gotten your lower swing, all right, which you're going to use for your Fibonacci. You're going to use for your Fibonacci method. So you start having the market retrace, as market is the upper swing and lower swing. All right, so once the market have retraced, you retracing, you draw your flag. Once the market starts retracing, you draw your flag. So once the market breaks the other side of the flag, all right, breaks through the other side of the flag, you get into the trade. Enter here, placing your stop loss at the other side of the flag, or the next fib level. All right, so this could be 61.8 or 50 or 38, to thereabout. All right, I'm going to show you. We're going to see it on the chart. All right, so you get into the trade right here, and you expect that the market will now sell down. So this increases your win rate. You have higher win rate, and higher risk to reward ratio. Okay, higher win rate and higher risk to reward ratio. This is the benefit of using the Fibonacci or the OTE while trading entry confirmations. You have higher win rate and you have higher risk to reward ratio, because this is going to be your entry, this is going to be your stop loss, and you see you can sell the market down to this point, giving you a higher win rate. So let's go into the chart to see how this works. So first of all, you can see, I can see this zone here. See this zone. This is a buy zone. All right. Where is it? Okay, just do a okay. I just do a supply zone. Okay, this is the supply zone. All right. So in this case now, this is the zone. So as the market got into the zone, we wait for a break of structure to the downside, which is our, if you scroll down to downside, you see that this is where your change of character occurred. If you go down to lower time frame, so once the change of character occurred, I've marked my swing high for my fib. So you now take it down. See that the market broke structure, giving me my second fib level, or rather my second swing low. The swing low, I've had my swing high. So because how do I know this is my swing low? Because the market started retracing right here. So as the market started retracing, I draw my flag, and as I drew my flag, the market broke this flag, even retested the flag, and you see how the market sold down. All right, this is my take profit. Take profit. So this is a fib level. This is a Fibonacci level. Rather, no, here, yeah, this is a fib level. The market took this fib level. Fibonacci retracement level. Now let us see. Let me apply the Fibonacci tool to this chart so that we can see how it actually played out. Okay, you know how the Fibonacci tool works. All right, see, this is actually the Fibonacci here, the Fibonacci tool. All right, you go to your shapes. So this is the Fibonacci tool. So I'm going to click it right now. I click on the Fibonacci tool, and this is my swing. I'm going to draw from my swing high to swing low since I'm selling. All right, swing high to swing low. I'm going to drag it from my swing high to swing low. All right, so this is my swing high and this is my swing low. So you can see that the market retraced at 61.8. This is 61.8 mark. It's retraced at 61.8 before it now sold. So this gave me extra, and my stop loss will be placed at 76.4. 76 is the next fib level. This is going to be my entry. My entry will be after my flag has been broken to the downside. All right, but the market respected the 61.8 level. All right, so this is my take profit. Okay, so this is one. So let me show you another one. Let me show you another one. We just saw one behind us right now, another level, which is we saw a demand zone here. So for you can see this demand zone. For this demand zone, this is the demand zone. All right, that's the demand zone. All right, so the market came down. The market came right down into the zone, broke structure to the upside, giving us our change of character, and now bought right up, giving me my swing low. I'm looking for my swing high. This is my swing high. Okay, so when I got my swing high, this is my swing low right here, swing high. So the market started retracing. I pull out my Fibonacci tool, apply it, have my flag, and I know the market will have retraced. This is a level. This could be 50% or 61.8 or any other Fibonacci level. But I wait for the market to break my flag. Once the market broke my flag, I get into this trade right here. All right, I get into the trade right here. And now place my stop loss at the other side of the flag or the other fib levels. But I'm entering when a flag has been broken after a fib level has been respected. So let us place our Fibonacci to this and see how it actually played out. Let me place our Fibonacci. Let's go again to the Fibonacci tool. So since we are buying, I'm going to draw from the swing low to the swing high. All right, since we are buying, I'm going to place from the swing low to the swing high. So where did the market respect? The market respected the 50%. The market respected the 50% fib level. Market respected the 50% swing fib level before it actually now bought up, and you can see our flag broke the flag right here, and you can see you get into the trade and you make your profit. Okay, all right, so you can see the market continue to buy up after that. These are profits. All right, these are profits. All right, so let us see if we can see one or more examples before we wrap this video. Okay, this is another example. All right, this is another example. You can see that this is a rally based drop supply zone, and you can see that the market got right here, broke structure. There was a fib, there was a change of character right here, change of character. The market broke structure, and now we have the market started retracing. These are swing high and swing low. If you pull up your field tool, you see that the market continued to retrace right, and perhaps may have retraced on one of these fib level, broke structure, and now dropped. All right, let us apply our fib tool to this. Okay, let's see our fib tool. We apply our fib tool to this. You are drawing from the swing high to swing low. Since it's a sell market, you are drawing from the swing high to swing low. Okay, you can see that the market okay, no, we are not drawing here. We're drawing, this is actually the fib. This is actually we are drawing on this. We are drawing from the swing high to the swing low. All right, so the market respected the 61.8 level. The market retraced from 61.8 fib level, and you can see, you draw, if I should draw my flag, the flag was broken right here and retraced and now sold. Okay, let me remove the fib tool to show you. So this is my swing high, the swing low, because there was change of character that happened right here, and you can see that the market now retraced. I have my flag, came down, broke the flag, and now sold. All right, this is a flag. So you can see that this is the fib level that the market retraced to. This is retraced to 61.8, as I just showed you. So this helps you to increase your win rate. All right, this increases your win rate and gives you higher risk to reward ratio. Let's see one more example and we call it a day. Here's another example. Let's just go straight and place our fib tool to it. All right, let us just place our fib tool to it. We are buying, so you see the market. This is our swing low, swing high, change of character, and now the market retraced down here, and there was a buy. All right, let us remove this swing. Let us remove the fib tool so I can show you, depict it for you in a clearer way. The market bought up, giving you a change of character, and now started retracing, giving you a flag, and now broke flag, retraced, and bought. All right, so this is the strategy. Very lovely strategy. Higher win rate. Your stop loss will be here, your entry here, stop loss here, your take profit here, take profit here. All right, this is a lovely strategy. You can see another one right here. So this is the last one I'm going to show you before we close. You can see here as well, the market broke structure, giving us a change of character, and now retraced to a fib level, broke structure, and bought. All right, so let us place our fib tool to it as well. We place our fib tool, we are buying, so we're going to take it from the swing low to swing high, and you can see that the market respected the 61.8. What can you observe? In my previous Fibonacci video, I told you something. I said the golden Fibonacci level is 61.8%. This is where most of the retracement happens. It can happen at 50%, it can happen at 38.2 or 76.4, but majority of the times the market would retrace at 61.8. So you need to pay attention to 61.8 level. The 61.8 fib level is the golden level, whereby most retracement occur. All right, so that is it for this video. If you found value from this content, kindly do what? Please subscribe to this channel if you're here to do so. Like this video, share with your friends. I want more people, more traders that are struggling to benefit from my content so that they can become more profitable and they become professional and successful forex trader. So, and if you are here to join our Telegram channel, this is an opportunity for you to do so. And if you want me to mentor you one-on-one on the principle of forex trading and to become a professional forex trader, can kindly contact me, and my contact details in the description box of this video. Till I come your way next time, I wish you a very wonderful day ahead, and continue to become a profitable and a successful trader. Do have a wonderful day. Bye.